Yo, so I actually wanted to do my weekly bias for this upcoming week. Haven't recorded in like 2 weeks or something, but let's first go to the economic calendar. So this upcoming week we had news on Sunday. Um, so that is what we had. Wait, what is this actually? All right, yeah. So we had news on Sunday. This actually for me is like not crazy news, but it's actually for me it's actually the first time that I'm experiencing this. US enters daylight standard time and clocks are moved forward by 1 hour. So that means, yeah, the clock moved 1 hour forward. Yeah, literally what I said. But here it means in Netherlands, it means the market always opened here at 3:30 p.m. and now market opens at 2:30 p.m. So that's actually for me that's actually kind of like a change. But yeah, it is what it is. And then on Monday, no news. So it's today. We have market is open right now. It's almost 11 a.m. But I'm not trading today because we have accumulation day, Monday with no news, and tomorrow we actually have CPI news as well. So we have CPI news, you have 10-year bond auction, Wednesday 30-year bond auction, Thursday PPI, unemployment claims, Friday news folders as well. So not really a crazy week, but CPI is crazy though. But yeah, my analysis for this week. So basically last week what we had is we left this equal lows, perfectly equal lows actually. We left this here previous week, and then we swept the buy side here again. So for this week, and we got displacement after that. So for this week, I'm actually thinking that we want to go all the way to these equal lows. Definitely want to sweep then 100% this week. And then from here, we could just like retrace. But Monday is accumulation day, so don't really expect anything today. But basically what I want to see is like in the overnight session, or like maybe, yeah, like in the overnight session. And on Tuesday, I actually want to see CPI take out these equal lows here. And then we also have these equal lows. So like not equal lows, but like it's low resistance liquidity really. So as you can see here on NQ or on the S&P, you can see we have equal lows here. So right here. So we actually have low resistance liquidity there as well. But actually what I'm thinking is that maybe I don't want to see those equal lows get taken out. I don't know, maybe it will happen. But if you look at DXY, then we finally are in this market maker sell model, which I said was like the most perfect market maker sell model you're ever going to see. But yeah, we just swept these first accumulation of the buy side of the curve. So we swept it here, and we now have displacement tree upside. We swept like equal highs here as well, but I deleted that here. But now I'm actually expecting for DXY to get like a retracement. Definitely 100% this volume imbalance with equilibrium here. But maybe we could go higher, and that would mean that we would take out these equal lows. But I don't really expect it to be, because we're in this market maker sell model, and we're now in the distribution phase. We're in the second stage really. So from here, I really want to see market just drop, or like maybe this is like the first one, and then we're making this second one. So it could be that we retrace here 100% there, and maybe I don't really want to see market come above this order block here, because we have like a 2-day order block here. Not yet, but we are about to have it like 8 hours probably. If this candle closes above here or taps this wick here, then this isn't the order block, and then I want to see market come into the rejection block, but I don't really expect it to happen because it's Monday. But yeah, I want to see market go for like this order block max, so like we could react off here as well. But I think these equal lows are too low. I want to see market just go more to the upside, and I want to see actually like a big market maker sell model in the future. So this would be like our first accumulation, you could say. But yeah, I don't know. Don't know. We'll see this this week. CPI could be that bad that we would go all the way through this volume imbalance and then like through here, and then I would expect these equal lows. Of course, I'm not going to ignore what market is going to give us, but for now, I'm not sure about these equal lows. I'm 100% sure about these equal lows, so that's my bias for this week. These equal lows to get hunted, but they probably already would get swept tomorrow, I'm thinking. But yeah, we also have this volume imbalance, this unicorn, which was used here, which created the equal low there as well. But I think like a volume imbalance is gonna be like a bit of consolidation inside of there. But yeah, we have these equal lows, so definitely I want to see those get swept. Yeah, that's basically it. Don't know for this entire week what's gonna happen, but yeah, don't know for sure what this entire week is gonna give us. But I do know for sure that we wanna sweep these equal lows. On bigger time frame, I can't do anything because we're at equal or at all-time highs. So from the daily, that's all I can see really. I don't have anything on these time frames. So yeah, I want to see these equal lows get swept, and what I really want to see is like overnight session to come inside of this SIBI here, and from there I want to see big displacement through the downside. Yeah, that's basically it. Don't really have anything else to really say about this. So my draw on liquidity, definitely these equal lows, and we'll see the rest of this week what CPI is going to bring, how big the news is going to be. So maybe we want to go for these lows and then sweep that as well. And then from there, where could we go? Well, I'm actually expecting DXY to be very bearish. So that means for the indices to be very bullish. So what I want to see maybe then, we're now on a weekly time frame. So let's go on like a weekly time frame here as well. So yeah, what could we see? Well, maybe we want to tap aside of that order block. Maybe we want to go even higher. I don't know where to. Because if we, yeah, maybe we turtle soup this order block, I don't even know, and then react off the rejection block, but I don't want to see this high really get swept. Also, this standard deviation lines perfectly with the liquidity and the Tron liquidity, which is actually inside of a monthly busy somewhere there. But yeah, I'm really bearish on DXY, so that means really bullish on the indices. So that means that we probably want to stay inside of this range of this weekly. So we have a low and then a high, so this range. So we have swing low and swing high here as well. We have swing high here as well, yes and no, but I want to see if this entire range, like down close candle, up close candle. Yes, we have a down close candle here as well, but it doesn't make sense to me. So this busy here, and then we didn't feel this imbalance the entire way, so I could see this low inside of this imbalance. But that's basically if we only go through if we want to sweep these equal lows at when CPI comes out tomorrow. So but for now, only these equal lows, and from there it's just, I don't know, from there it's just waiting for CPI to come out really. But that's it for the indices. What else? GPUSD. So finally got that displacement through the upside. So we got this accumulation here, then we got all these lows, all these stack lows, manipulated them, and distribution from the upside there, like really no retracement from there. 2 days of retracement, or like 3 days of retracement there, but nothing else really. Sweep all those highs, and then from here that was basically the first target, and from there the second target would be this high here, which would be the -2.5 standard deviation. But I don't know for sure with this target, but yeah, this target already got delivered. So that was it for GBUSD. USD, Euro USD, don't really look at that, but actually have this roughly equal highs here. So that's a nice target for USD. So still see some space through the upside because we have perfectly equal highs. Even though we have an SMT, I don't really think that SMT is gonna hold because we also have a busy here and this big range. So yeah, that as well. Also had this on Twitter as well. Where was it? Here. So easy 1 and 2 are in my opinion, and then GPUSD delivered perfectly. Actually had a limit order here as well. So easy 1 and 2, which I said as well. This was for March 4, and then this was March 8, so 4 days after. Like really beautiful. Also, what else? Don't really care about this. Oh, we got those equals there. Oh, that's actually perfect. I didn't know that. Alright, so we're now at all-time highs here as well. And then from here, yeah, where can we go? We're now at all-time highs, and we're still going. So we'll go to equal price points. So first target's probably going to be 75k, then also 100k, but I don't know for sure that. I don't really know with this here. Crude oil. Also set this that we want to go to. Oh, let's take it over here. Crude oil. So first target was here inside of this SIBI, which is also like a BPR, I think it was. This was like a small BPR here, so we tapped inside of there. Or was it? I don't even know. But we had this equilibrium here. Look at that equilibrium get tapped into there. Let's make it singular one. So equilibrium get tapped into there. From here, I don't know for sure if we still are bearish. I don't think so. I think we still want to manipulate this here. I think we really want to take out this high here because we have equal highs left here. We're still like accumulating. If we had more displacement to the downside, then I would say that we're in that market maker sell model, sell side of the curve, but don't really think that. We still have a lot of accumulation. I think we're just building up more liquidity here. So what I want to see is basically a reaction to the upside. And where could we go? Well, we could go definitely these equal highs then, and maybe this optimal trade entry 0.62 level, and also this rejection block, which is like on the, I don't even know, monthly, 2 month, the 2 monthly candle it is. So we could go there, and then that would be basically the turtle soup. And from there, I want to expect, or I want to see this target 2 get hit, and that's basically this low inside of this order block, and then even a further target could be below here inside of this order block here as well. But from here, I want to see this target here. Would also be a really big market maker sell model. Look at all these stacked equal lows here. So low 1, 2, 3, 4. So we have like 4 equal lows here. A lot of liquidity beneath that. So yeah, definitely want to see, not right now, but definitely later I want to see that market maker sell model. Yeah, that's basically it for crude oil. What else? Yeah, and then DXY. So DXY, we are in a big market maker sell model as well. I swept the sell side liquidity, which was a -1 standard deviation as well. So react over there, a big wick to the upside, like a I don't even know what to call this candle here, but big displacement back to the upside. And from here, I wanted like to see retracement. And then what I had marked out was a unicorn equilibrium here. So it's like, where is it? It's like a breaker inside of here. So the biggest breaker on this time frame, it is, so we have a swing high here, we have a swing low here, we have a swing higher high here, and a swing lower low, and then from A to D. That's basically where you put equilibrium from, but then also equilibrium from just this leg here. Let's see where that is. So that's equilibrium that's inside of that volume imbalance there. So what I want to see for DXY is inside of that volume imbalance to get like a retracement there, and that would just match with the indices. But I'm really curious what CPI is going to bring tomorrow. Let's look at standard deviation of this leg here, where that lines up with. Oops. So here, standard deviation from there. So -2, -2.5 standard deviation comes in line with equilibrium. -4 standard deviation comes in line perfectly, or like not here, but if you look at like this, perfectly, it's really goes to that order block. Order block low there. So there we could react from there, and that's where markets wants to top at. And then let's see if like a BTC like standard deviation. So -2.5 standard deviation. If we do want to go there, that comes perfectly in line with that order block high. So we could turtle soup that and then tap inside the rejection block and then go lower. We'll just show what we'll just see what CPI is gonna bring. But that's basically it for the weekly bias. Market is open right now, but don't really expect anything. Let's see what market already did. So market opened right here. What did we do? We swept this low here, or this low here. Got some displacement through the upside, but nothing crazy really. Actually, these were equal lows here. Standard deviation from here, -2, -2.5 brings us inside of that SIBI, but I don't trust any standard deviations on Mondays because Mondays are just accumulation days. So we could just sweep this low here, and then from there I could go all the way up there. It could happen, I don't know, but let's see from this breaker leg. Let's say we do want to respect it. Then we have a breaker inside of here, and we actually have a unicorn inside of here, if that is the singular one. We actually have a singular one here on the 8 minute. 5 minute, you actually have a singular one here as well. So so that would be only 5 minutes. So this would be the unicorn here. So this would be the unicorn. So price has to respect this, but it's Monday, of course. So I don't really expect that to hold. If we get equilibrium from here, then this is the A, B, C, D. Then from A to D, we have equilibrium there, and that's what market is reaching for. So I've seen a lot that when equilibrium comes in line with the unicorn, then your entry doesn't have to be there. And maybe your stop loss doesn't have to be all the way there, but just simply enter off of equilibrium, because price is gonna, like, if I have it from here to here, then price most of the time isn't gonna tap equilibrium there. But when you have like the unicorn equilibrium, then price most of the time is gonna tap inside of there and then react. But it's Monday now, so I don't care. Let's see if market reaches for equilibrium here, but we could just displace through here, and then we could just sweep these equal lows, which actually on a lower time frame actually looks like a market make a sell model here. So let's see where we're reacting off of here. So we actually have a imbalance here. Let's look at a bigger time frame. So only 1 hour, that would be my order block. So here to here. Oops. So mean threshold there, that's just perfect. Look at that. Damn. So react off mean threshold there. Have displacement through the downside, looks like a perfect market maker sell model. So we have accumulation or original accumulation, low risk buy there, distribution to the upside, accumulation 2, smart money reversal from here. And let's see if we actually have them. If we actually have a S&T at those highs here, because that actually would look really good. All right, so we don't have an S&T here. If we did have an S&T there, then that would be actually an A+ setup, but time isn't aligning with price, so that isn't a good setup. So as you can see, we left equal highs here. So from there, but from here, it would just look at a beautiful market maker sell model. So sell side would be here, sell side would be there as well, and then original accumulation sell side would be here as well. And then those equal highs, I'm not expecting it to get hit in this sell program. So sell program right now, but later in overnight session, which I said as well, in overnight session when we want to go for that SIBI there. So I want to see these equal highs get left actually, and I want to see this sell side get swept, and then this sell side get swept as well, but you never know what's going to happen. It's Monday again. Let's see if we have like a breaker here. So we're still, this would be breaker A, B, C, but we're anticipating this to be breaker, so this would be D, but we could also Toro soup this, we don't know. So we're looking at a breaker inside of this leg here. So you have a swing high, we have a swing low, and then we don't have a swing higher high, so that wouldn't be a breaker. So I look for a lower time frame. So we actually here on the 1 minute, you have we have a swing high, we have a swing low B, we have a swing high C, and then we have a swing low D. So from here to here, that would be A to B leg standard deviation. Projection from here would be -2, -2.5. Doesn't really line up with the liquidity here. I want to see standard deviation be beneath the liquidity, so I get it from the BTC leg here. That's actually perfect. So -2, -2.5 standard deviation. -2 actually comes perfectly in line with the sell side here. And then -3, -3.5 standard deviation comes perfectly in line with the sell side as well. So I'll hold this here. Then I'll leave this here, and then I'll put, because this is the only breaker, I want to see a retracement inside a singular Fourier gap. So you have one here, we have one here, we have one here. So that'll already be 3 Fourier gaps. So I want to see a singular Fourier gap. So unicorn equilibrium would be A, B, C, D. A to the D leg from right here. Right there, so right there. And then here would be equilibrium. And then I want to see price come inside of there. But if the Fourier gap, singular Fourier gap is above this, then I would just enter inside of that singular Fourier gap. So example for this is we have 1 Fourier gap here, 2 here, 3 minute. We're still inside of this candle, so we'll see what happens there. But as you can see, unicorn equilibrium is right here. And then we have a singular Fourier gap right here, so that would be my entry. I don't care about the unicorn equilibrium. We could react off unicorn equilibrium then go lower. That can happen, but if you miss a trade, then it's just fine. Let's see what we do with this candle. So we have two rate gaps on the 3 minute now. So I go to the 4 minute, and on the 4 minute we don't have any singular busy. So or I just wait for this candle to close, or I go to the lowest time frame with two rate gaps. So right here we have two rate gaps here. So that will actually both be, oh, that would just be a SIBI, not a unicorn, because the breaker's all the way right here. Breaker's all the way right here. And then this would be the only rate gap aligning with that breaker. So that would be the only unicorn. This rate gap isn't aligning with that breaker, so that isn't the unicorn. But this candle's about to close. Also wouldn't be the unicorn, but still we have a unicorn equilibrium here. And then my entry wouldn't be inside of here. This is actually a perfect example here. And let's see if we do get that retracement. It would just be a regular SIBI. But let's say your setup was here, and your entry would be there, and stop somewhere there. But let's say your entry was here. If you have unicorn equilibrium here, you could just put that up, and then my target or my entry would go there, and hopefully we get it here. And that's basically the example. And you could see like a perfect reaction most of the time. And yeah, that's basically it. So I want to see how we react off there. So where would my actual stop be? Not this candle, it would actually be this candle size. So actually pretty big stop. Still the 1-on-1 risk to reward. But yeah, we'll see what happens. And then here would be the singular SIBI, which are already marked out. So market always wants to retrace back to a singular SIBI because market is fractal, right? So if you have multiple SIBIs, market wants to rebalance always. So if you go to time frames where there's a singular one, then market always comes back to the singular ones. Doesn't always have to happen, but most of the time that's gonna happen. So if you go inside of this SIBI here, then expecting it to get equilibrium, unicorn equilibrium to get tapped as well. So we'll see what happens. But yeah, definitely I want to see that sell side liquidity get tapped. And this also would be outside of my regular trading hours. So I would I'm trading from 9 to 11, and then I have like a small 15-minute break or something, like a small break between there, and then I go trade again from 11:50 to 12:10. So that's basically the lunch hour macro. And then any setup that forms in there, I can just take that, even though I take a trade at like 12:20, I don't know, but if the setup forms inside of that macro, then I'll still enter. That's basically my trading time. And then in the afternoon I trade basically from 1 to 3. So if I do, that's optional, that doesn't have to, but those are basically my trading times, or my regular trading hours. So yeah, we'll see what happens here. Oh yeah, and also I bought the funded account, so I actually got a Top Step funded account, a 50k account. It is not the actual account which I wanted to get. It was like a 100k account that I wanted to get, but this account is just for just to step it up a bit more. I wanna just step it up a little bit more, just not to the full size, but just step it up a little bit more. So yeah, that's just what I said. So trader fade here. So let's log in here. So basically I'm up on the account with like 41. I took 3 trades, 2 losses, 1 win, and that ate all the losses there. But yeah, basically I want to get this account passed. Let's see if I get it passed, but yeah, just wanted to mention that. Yeah, and then let's go back here, and then we'll see what happens here. But yeah, this is outside of our regular trading hours, so this setup formed in outside of 11. So this candle closed at 11:12 right here. So this isn't a valid entry for me, so I won't take this trade here, even though it does work out. But it's also Monday and the time isn't aligning, so not a good trade here, in my opinion. But we'll see what happens here. But yeah, let's see what we do. Doesn't surprise me if we just inverse this SIBI and then take out these equal highs, even though it's a beautiful market maker setup model, even though standard deviations are lining up perfectly. Doesn't surprise me if we take out those equal highs, but I don't expect it to happen though. Yeah, let's see what we do there. All right, so we still left this SIBI here. Once this low gets swept here, then I will just track the equilibrium, unicorn equilibrium. I'll just track it lower. We do already have taken this. Oh wait, what? I thought there was yes here. All right, so yeah, we already have taken this CB inside of ES. So we could have an SMT with this and this high. That could be a thing, but I don't know. Yeah, could be. Damn. What the hell? That's ugly. But yeah, I'm just gonna end this video. You'll see if this didn't work or not, or if this did work or not. But I'm gonna end the video and hope you enjoyed the weekly bias. And I'll probably I don't know, but maybe I will be recording the trading, but we'll see. Yeah, so